So let me just officially welcome each and every last one of you all to BYOB Market Talks. Yes. So tonight, what we're doing is we're going to help you build that relationship with the market. Now, building that relationship and understanding that relationship that you want with the market, you often hear me say that the market is going to talk to you. Good evening, Orlando and Chattanooga. You often hear me say, New York, hello, that the market is going to talk to you. And that's ultimately what you want. You want the market speaking to you. You want to be able to hear what it's saying. And so that comes through the development of a relationship. Now, where does that relationship start? Right? Where does your relationship start? Your relationship is going to start with you. It is an inside out job. And so that's why it's so important for you to drop those affirmations in the chat. All right, those affirmations, and what are they, and why do we say them? And so I need you all to understand that you have to walk in this belief and this confidence, that and some expectation. Everything in excellence is what we do, and you have to walk in an expectation. And so when we say these affirmations, we're setting the stage, we're setting the tone of what you're sitting down to do. So I am a BYOB master trader. I am the signal. All my trades in profit, I am 777. So you want to make sure that you're walking through that, you know that, you believe that, you understand that, right? You definitely want to make sure you understand all of that. And so understanding that we have that mindset, you can add to it, just don't take away from it. Those are foundational for a reason. And so I always see, you are adding to it from a perspective of economic empowerment. I see I'm divine. You add so many things to it, but that's what makes it personal to you. And so you definitely want to do that. You want to make it personal to you, right? You want to make it personal to you. So, and I love how you all have added patience, profit. Patience, profit. So I love how you all have actually added that to it. So let's go ahead and get started this evening. If this is your first time here with us this evening, let me get a 111 in the chat. And if you're still learning how to cash out, let me get a 222. Let me get a 222. So let me say welcome, and welcome back. Welcome, and welcome back to each and every last one of you all. So welcome. I see you all BYOB worldwide. So, but in Cleveland, you joined us. So, and I don't see a city in that one. So, but welcome, and welcome back. Now, this is, let's think about this for a minute. Let's talk about this. We talked about this being NFP week, right? We talked about this being NFP week, and we talked about the opportunity and the ability for you all to make a decent, like a nice amount of profit, that this week was going to be very profitable, and that patience comes in, your discipline comes in, your trade plan, all of that comes in. If you have a question, comment, testimony, drop it in the chat. I promise I'll get to it. I see your hand, drop it in the chat. I promise I'll get to it. So with all of that, this is exactly what this was. We all had that type of week. And so it's all about the patience and the understanding of the market, the patience and the understanding. And then, of course, understanding how to utilize the tools. And so what we're going to do, and I should be sharing my screen now, and I'm not. So let's go ahead and do that. So what we're going to do is we're going to dive in here this evening. And so first, what I'm going to do is I'm going to walk you through the strategy, BYOB cash out. And of course, we're going to continue talking about, we're definitely going to continue talking about how to utilize the vibrato, understanding where the triggers come in at, okay? And understanding why we need to understand the market to make us a more effective traders and really be able to utilize these triggers that come in. Now, they're not signals, they're triggers. So I cannot stress that enough. They're not signals, they are triggers, all right? They're triggers. And so when you understand that and you know that, then you're able to operate from a better perspective. And so let's go ahead and dive in here, and what we're going to do. Oh, let me back up just a minute, because I know we have some individuals on here that's never been on here before. So I really want everybody to understand exactly how this works and what we do. So first things first is what we do is Tuesday and Thursday nights are our training calls. And right now, you're on Market Talks, BYOB Market Talks. And so that's all designed for you to understand the educational process, the foundation. Everything we do, we should do it from an educational perspective. You always want to learn your skill craft and learn your craft. And then of course, on in the mornings, Monday through Thursday, we're showing you how to take what we've learned, analyze it, and implement it into the market. And that's what we're doing. And so tonight, I want to continue right here where we're talking about understanding the BYOB cash out strategy first. And then I want to show you how those triggers, and I know it wasn't last 30s deep because we had the whole Robinhood thing, you know, and then of course, Dr. Bywood really came in and broke it down right behind that. But it's definitely the Thursday before last. It's kind of the first series to what we're discussing tonight, you know, that so if you did not have an opportunity to watch that, that's definitely something that you definitely want to go back and take a look at. And so right here, this is where I want to begin with you all. And so I really want you all to understand, and we're going to use this surge up, but I can also use this movement down so you can actually understand the strategy BYOB cash out. So with that being said, I want you all to know that no matter, you can take the trade. I can do my 10 pips and cash out. And that's the foundation of where we trade from, okay? That's the foundation of where it begins. And so understanding that that's the foundation of where it begins and the foundation of where we take our trades from, you know, I just really, really, you know, want you guys to, you know, really, really, really have an understanding of how this works and why it's so accurate. And the BYOB cash out strategy, you know, just for clarity, I want you all to understand that it combines and it contains the 3 areas of value when you're looking at that price action trading, or, you know, when you're kind of looking at, you know, those things. So that's why this is so accurate. And so I really, you know, it's kind of like that price action with a twist, right? So definitely want to make sure we understand that. So the first thing we're doing and what we're looking for is that blue line cross over the red and an upward or downward momentum, right? That blue line cross over the red. And so that's going to happen around the 80, or it's going to happen around the 20, right? Or around that 80 or around that 20. And when you look at that and you see it's going to happen around the 20 or around the 80, that's going to determine if I'm looking for a buy or a buy or a sale, okay? A buy or a sale. And so as I'm looking at that and I understand that, looking at this from that perspective, if I'm looking for a buy, I definitely have that blue line cross over the red and an upward momentum. If I'm looking for a sale, let me see. If I'm looking for a sale, I have that blue line cross over the red and a downward momentum around that 80. And so once again, it all starts on the 15-minute chart. And so let's see. So now I want to come up here and I want to look at my candles. Understand these are Hikanashi candles, okay? These are Hikanashi candles. They're trend candles. Underneath these candles, because they are an indicator. Let me be clear. They are an indicator. But underneath these candles, you know, what you're seeing is the regular Japanese candles. Now, what Hikanashi candles do is they actually translate for you. They actually do the interpretation. That is what they do. And so knowing that that's what they do, basically you're allowing the Hikanashi candles to interpret what the Japanese candles are saying. And so that's ultimately where it starts from, right? That's ultimately where it begins. And so now, then I have my PSAR. Now my PSAR is a parabolic stop and reversal. That PSAR is the flip. It's like the support and resistance line that actually moves with the market, okay? Also, it determines where my stop loss goes. My stop loss goes above the PSAR or below the PSAR after you do your analysis. So let's analyze both of these. I already know we took so much profit today on this. This was just beautiful. You know, it was just beautiful. So now, when we look right here, I have that blue line cross over the red and downward momentum. And over here, I have that blue line cross over the red and an upward momentum. This was a news spike, okay? This was news. We were prepared for it. We analyzed it on a 5 o'clock call. We were ready for the reaction to the market, all right? We were ready. And This is why I'm gonna show you why these buy orders, the buy and sell stop orders are so important, you know. And so once again, go back and watch the Thursday before last training, because that's really kind of part one, and this is actually feeding off of that. And so this is why they're so important, because you might have had an opportunity to miss this movement. And there's no such thing as missing a trade, but you can actually prepare yourself to get in a trade, and you're not actually having to sit in front of the computer. But in order to do that, you need to have some understanding, right? You really, really need to have some understanding to how it works, like how the market works. Now, so starting here, blue line cross over the red and a downward momentum, blue line cross over the red and an upward momentum. This one means I'm looking for a sell. This one means I'm looking for a buy. Now, right here, when I come over here, what you're seeing is that blue line cross over the red in an upward momentum. I have a green candle with a flat bottom, and my PSR is actually at the bottom, okay? You notice I'm on a 15-minute chart. So here, exact same thing. Now, why do we start here? Because what we're talking about tonight and what we're explaining is so important to you being able to take it to the next dimension. So everybody needs to start on a 15-minute chart. From that perspective of understanding the strategy, learning the strategy, understanding how it works, understanding how it moves. You know, this is basically where everybody is going to start. And so when I have that, so you notice I'm at the top, blue line cross over the red and downward momentum, red candle with a flat top, PSR flip to the top. So now what you're seeing is the BYOB cash out strategy. That's it in its simplicity. Now, what I want to check now is my time frame confluence, okay? I need to check my time frame confluence. And so with my time frame confluence, I want to go to the hour. And when I go to my hour, what you're looking for is a setup. You know, it's not in that, you know, it's not there. The setup is not. So let me say this. The setup is not set up like I can take the trade on this right now. That's not what looks like in the setup coming. That's not what that means. It's the same thing that we do on the lower time frame when we have to wait. So notice in both of these situations, this obviously would have been like a doji candle. This obviously would have been, you know, kind of wickish. But you can see within this area, you know, you can definitely see like right up in this area how it's starting to come down for that sell. Now, when you start seeing indications like that, I can drop down to my 30-minute. GBP, let me be clear. GBP is the only currency pair that you can do that on. It is the only currency pair that you can do that on. And it is the only currency pair that you can do that on because of the amount of liquidity in the market, how much liquidity that it pushes out in the market. So it really makes it quite easy to get your 10 pips and cash out, okay? But it moves. So I just want you to understand that. But because GBP, the same thing I tell you on the indices, because the way it moves, you need to make sure, because, you know, you need to make sure that as far as you understanding and setting your analyzation up and not skipping steps, okay? You need to be sure that you do not do that. All right, I cannot stress that enough. You need to be sure that you do not do that, okay? Do not skip anything because you think you can get a quick 10 pips or first support and resistance line. Do not skip the steps. Do not do that, because if it goes back in the opposite direction, as many as you can gain is as many as you can lose. And we don't want to operate from that standpoint. Like, we really don't want to operate in that perspective. So now when I drop down to the 5-minute, okay, I drop down to the 5-minute, and when I'm looking at the 5-minute, this is literally what we're looking at. So you can see that it needs to still be selling, and this one needs to still be buying. And that, ladies and gentlemen, is the BYOB cash out strategy. So that's the strategy itself. And so before I jump into our actual training for tonight, you know, before I jump into that, let me get any questions, comments, or testimonies. I already know we have a testimony this morning about it being the most profitable day that you've had. So I love that. But any questions, comments, or testimonies, you know, questions, comments, testimonies. If Okay, so I'll go over it one more time. Any other questions, comments, or testimonies? All right, so let's go ahead and take a look at this. So what I'm gonna do is I'm only gonna focus on this one, and I'm gonna go through it. And after I go through it this time, I'm gonna go to what our training is for tonight. Now, if there's further explanation needed, Tuesday's training, it's just GBP. Tuesday's training is actually uploaded already, and that's the BYOB basics. And so on BYOB basics night, we spend that entire call going through that. So we spend an entire call moving through that. All right. So now here we go. We have the blue line. So what I'm looking for is I'm coming to my stochastic, and I'm going to be at the 80 or the 20, right? You start here because this is a leading indicator. So we have blue line cross over the red and that upward momentum. Blue line cross over the red and upward momentum. That tells me that I'm looking for a buy. So then I need to wait for my candles to set up and my PSR to flip. Flipping means you notice that as they on the sell, it's at the top. You notice that as it's in a buy, it's on the bottom. So what I'm doing is I'm waiting on the green candle with a flat bottom and a PSR flip to the bottom. So blue line cross over the red and an upward momentum, green candle with a flat bottom, PSR flip to the bottom. That is the BYOB cash out strategy in its simplicity. Time frame confluence. All right. I want to go to my hour. When I go to my hour, what I'm looking for is here. It needs to look like I will be waiting on a setup. It does not have to be set up. I don't need a PSR flip. I don't need that. It does not have to be set up because I'm not trading on that time frame. So it does not have to be set up. And then of course, if I need to drop down to my 5 minute, and my 5 minute needs to be buying. Now my 5 minute needs to still be buying. Now, let me go ahead and let me help you understand how important that is. Because that kind of relates to what we're talking about today. That's very, very, very important. It's very, very, very important because of the simple fact that the higher time frames tell you what the market's doing. It tells you where the market's going. Our lower time frames, okay, our lower time frames is where you're going to see all the activity happen. And so let's go ahead and talk about that for just a moment. You notice that, all right, so first things first, there are a few things that you definitely are going to need to understand. And this is how you begin to develop that relationship with the market, okay? This is how you do that. And as you develop that relationship with the market, it's really going to help you understand how these triggers work. It's really going to help you understand as they come in. And so understand the market does is repeatable. What the market does is it goes up, it goes sideways, and it goes down. It moves up, sideways, down, sideways, up, sideways, down. That's just what the market does. Now, when you understand that that's what the market does, is you want to listen to the market telling you which direction it wants to go. We don't want to force it. And it's always been said that the trend is your friend, right? It's always been said that the trend is your friend. And so understanding that, what I'm going to do right now, there's two things that you have to understand in order to be effective in your trading. Now, I can just look at this right now and I can see a support and resistance line here. I can see one here. I can see one down here. I can see one up here. And so you see, I'm on the higher time frames. Now, of course, on the higher time frames, I'm not telling you to start here at the daily, but of course, on these higher time frames, when I'm like this obviously surged up a little bit, but when I'm on these higher time frames, it's really apparent. You see, I'm on a daily. You notice that. So on my higher time frame, this market has definitely been in an upward trend. So it's definitely been moving. I mean, that's just, that's obvious. Whether you understand why, how, what, when, where, any of that, you can see that's going up overall. And so but on the higher time frames, my support and resistance lines are just more dynamic. Like they're more like, those are the ones that matter the most, because the higher the time frame, is really where you really see what the market's doing and where it's going. So around the hour and a 4 hour, okay, around the hour and a 4 hour is really where you can kind of, zoom in and you can really kind of see what's happening and what the market's doing. So that's the 4-hour. You notice that that looks like it's down in a sale. So we're going to focus on this area right here for what I'm explaining. Now, when I come over here to the hour, okay, when I come over here to the hour, you can definitely see the momentum in the market. And so let's show you, I want to show you two things. Now, areas of value. Remember, BYOB cash out strategy uses those areas of value. And so what I'm going to do is I'm going to change this to a line chart. When I change this to a line chart, you know, when you're learning your support and resistance lines, you can actually see where all the touches are. So if I just go ahead and I drop this on here. Now, why did I drop it there? I dropped it there because you see, think of it like a stop sign, right? They kind of think of it like a stop sign. Whenever you get to these points, you can see where the market moves. You can see where it's at, where it stops, where it pauses, you know, and sometimes, like right here, somebody runs a stop sign. We've seen people run stop signs. So this is what it is. Now, why the line chart? It's the actual closing price. And so knowing that this is the closing price, you're going to be able to see exactly where to put it. One thing I need for you all to understand, there is no such thing as a definitive line in the market. Our support and resistance lines are there. Our support and resistance lines are important. Our support and resistance lines give you an area because, as I just stated, you notice that how each one of these, it rejects off of this area right here. Let's just really hone in here a little bit. That's the closing price of that candle. You notice how there's some space in between here. I can actually move this down just a little bit, but there's some space that's in between here as this one touches, but it always comes there. So just as I told you guys this morning, just imagine it's a stop sign. It does not, whenever you go to a stop sign, you might have one leaving your neighborhood. It's somewhere in there. Whenever you get to that stop sign, do you believe that your tires always stop? Even though you stop at the stop sign, do your tires always stop in the exact same spot? They don't. So if that doesn't happen in our life, it's not going to happen in these orders being buy and sold and things like that. So you always want to understand that there is a zone around these support and resistance lines. And that's kind of what creates that little area, is because it's never going to stop in the exact same spot, okay? Never going to happen. So now, and also this is why sometimes you'll be like, wait a minute, it didn't hit my take profit. You know, so like, for example, if this would have been, for example, let me find one. Let's just say this one, you know, let's just say this right here. So if this would have been, you know, I'd have been trying to come up here before it pulled back. You might have been wondering, well, why did this happen? Why did this pull back? Why didn't I hit my take profit? You know, it's not the best one to show you, but you know, sometimes when you're taking a trade, it doesn't actually hit that point. Well, that's why it's not going to hit that point, because it stopped. You know, some people, you be like, well, they get close up. I mean, just think about how you really talk to people. Think about how you really react to people, right? You sitting there thinking like, would they actually get to it, or why did they park so far in front of it? You know, so when I say dipping for pips, that's that person that pulled out in front of that stop sign. You know, like, for example, right here, if you're looking at this one right here, this to me is more like a dipping for pips. Like, you see how this one, how it wicks up above it? You know, this is where I'm like, don't get too excited. It's probably not going to go. There's somebody that stopped their car in front of the stop sign and think they're doing what they're supposed to do. So I just really kind of bring this back and relate it to real life, and it'll help you develop that relationship a lot smoother and a lot clearer. All right. So now let's look at this. Okay. So you have support and resistance lines. Okay. We have support and resistance lines, and understanding that we have these support and resistance lines that are all through the market. Okay. Just kind of think about that, okay? I have these support and resistance lines that are happening, and these are actually where your triggers come from, all right? These are actually where your triggers come from. And so I'm gonna take them off of there because I'm gonna delete them because I'm trying to show you something. But this is actually, well, let me leave them. I just don't want it too marked up as I'm explaining this. So you can see that the market always reacts in these areas. So this is where your triggers come from, okay? From this is where this comes from. And so now let's look at this. And you notice I'm still on a higher time frame as I'm explaining this. I'm not doing it on the lower time frame yet. The lower time frame is the actual price, the movement, and the activity. So that's what all of that is. So now let's go ahead, and now I want to show you this trend, because like I said, I'm gonna stay in this area right now. And this is pretty good for GBP. GBP, like I have this one right here. As we look, this is Euro NZD, and you can kind of see this one is a lot smoother. You know, when I'm looking at that trend, it's a lot smoother. But I'm gonna use this GBP. Now, I'm gonna put this trend. Now, in order to draw a trend, you notice that you start having the market, it impulses, it corrects, continues, corrects, continues, correct, right? Impulse, correction, continuation, correction, continuation, correction, continuation. And so normally you're going to get about 3 to 5 of those waves, right? 3 to 5. And that's, so that impulse is 1, correction is 2, you know, 3, 4, 5. You know, we had another one here, but it's not always another one, you know, and that was because of what was happening in the market. So that's not the normal conditions, okay? So I just kind of really want to kind of bring that home. Now, so you get that impulse correction. Now you start understanding where the market shifts and where the market turns around and where the market changes. You'll start understanding that once you get 2 points to connect, okay? Once you get 2 points to connect. So I have my impulse correction continuation. Now I have 2 points to connect. So now I'm looking at this wave. Now I'm looking at my impulse correction continuation. Now I'm looking at my trend being down. There's still more to understanding the true trend change, but right now I'm trying to get you all to see the big picture. Like I really want you all. So I want you all to get the big picture. I still need clarity on when it's breaking the trend. That's what I just said. You know, that's what I just stated. So just give me a second to kind of walk you through this. And that's why I told you guys on Tuesday that this might take more than one training call. Okay. It really might take more than one training call, because I'm just want to make sure that we break this down. And so once you get these 2 points, okay, you get these 2 points right here, you're going to be able to see. Now, do you all see this? You know, so far, 555, impulse, correction, continuation, correction, continuation, right? You see it? Now, 555 in the chat. I want to make sure you see the trend lines, and I want to make sure you see that downward trend. Okay, great, great, great. Now, understanding this, okay? So now let's look at this. So as I'm looking at this, all right, I have a high right here. This is a high. This is a low. So you see now when it pulls back, so I had a high. Now this is a lower high, okay? Right here is a lower high. Now, so I had a high, I have a low. So it goes back up to make a high, but now it's a lower high, right? That's what it is. It's a lower high. So it's here, comes back here. Of course, that's a lower high. And then I get a lower, what do I get? A lower low. And then I get a lower high. And I get, this one was, this is what I wouldn't even call this one another wave. I would call it sloppy price action, because you can see where it pulled down, but it did not create that lower, it did not create that lower low that we're looking for. It did not create that. So it actually met here, right? It met it right here, but it never moved back up to create, another high. So this is what I would call sloppy price action. And then of course it comes to about here. So of course, and I want to kind of ignore that. I don't want that like that. Okay. So of course, now as you're looking at that, so this is that 1, 2, 3, 4, 5. You with me? So that's why I was like, it's not normal that you would get, but that's that 1, 2, 3, 4, 5. So that's that wave that you see. That's the wave. And now you notice that what I have is, I have this is where I have that lower high. So I have a high, I have a lower high, I have a lower high, right? I have a lower low, I have a lower low. You notice how each one, right? Each one is called a lower high for a reason. It's the high, but it will not break past this point. So I'm trying not to make this look like a coloring book, but I'm trying to make a point. It can't break, it can't move up beyond this point. So even this one, when it comes up, the next one cannot move beyond this point. So as they create, this is why they're called lower highs. It's higher than here, but it's not, it doesn't break past this one. So it does, so you with me? You guys with me right now? 555. I want to make sure you have complete clarity on this tonight. So great. So now this is our trend, right? This is our downward trend. This is that momentum. And then we know that when it gets down here, when it's going to break is when it breaks that last significant, it's going to break that last significant high, that last one. Like, so you notice that it has to break that last significant level, and that's what it has to do. And when it comes through and it breaks through here, it's going to break that last significant level. And so now that's what it is. So right, and I want you to focus right now on this. We're not breaking the trend just yet. I want you to focus on this. Like, I just kind of want you to stay in here with me. And so now what you can see, like I stated to you guys, that how it's moving. And you notice that when we get there, you always have a reaction and you have something that's going on. Now, when we say the trend is your friend, okay, BYOB cash out strategy, right? When you're on those lower time frames, well, let me go there first. So I'll come back. Hold on. So you see right here, this comes down, it comes up, it comes down. And you can see that this is why I like Hikanashi candles, because they move with it. All of these are red, all of these are green. All of these are red, all of these are green. When I go to the higher time frame, right? When I go to the higher time frame, the majority of my candles are red. The majority of my candles are red. You can still kind of see that momentum in there, that correction in there, but the majority of my candles are red. So we know we're in that overall downward trend, that overall downward momentum. And so this is why we check the higher time frame. This is why time frame confluence is so important. This is why we must do that, okay? This is why it's just important, because you want to know how you're trading. You want to know if you're trading with the market. That's what you want to know. You want to know if you're trading with the trend. If you're not trading with the trend, you want to know that. Like you want to know how you're trading, because that's going to help you. Do I do 10 pips? Obviously the trend is your friend. So this would be, if you're trading this, if you're trading in this area, you're trading in this area, that's what you call a counter trend trade. Okay, that's a counter trend trade. If I'm trading a counter trend trade, you do not know how big the correction is going to be. No one can tell you how big the correction is going to be. It does not always come all the way. It could have stopped right here. It doesn't always come all the way back up here to that previous resistance line. So this is what we call a counter trend trade. Okay, that's what this is. So what do you say? So it wouldn't be an uptrend until it passes at 37.50. So no, not way up there, but that's why I say kind of stay with me right here. And because I want to walk you through it, and I don't want to be all over the place. Like I don't want to be talking about one thing and then jump to another. I want to stay in a specific space. And that's why I say I'll come back to that trend change. Now, so this is that. So no, it's okay. It's okay. I welcome the questions, because it's going to help me. It's going to guide me to make sure I have given you guys the right information. So would it be if you have a sell on 15? No, hold on. Let me walk you through this. And then if I don't answer that question, ask me again. So now, so this, we know we're in that downward momentum. We know we're in that downward trend. Okay. Now we just checked the 4 hour and we know that the 4 hour is in that overall sell. Okay. We know that we're in that overall downward momentum. So now when I come down to my 15, when you're in that 15, you can actually see all that's actually happening in there. And you can see these support and resistance lines that we drew on the hour. So let me help you with that too. So you notice that, let me see here. This one doesn't have very many. other ones, but because there most of the time when you drop down, you'll see other support. Actually, you see one right here. I'm end up taking it off, but you can kind of see one right here where you have other support and resistance lines in here. You notice how you didn't see it on a higher time frame. It wasn't there. So with them, they're important. They are important. You notice when we're doing indices or we're doing something else, we'll mark these up as well. So they are important. They really, really are important, but they're not as important as the ones on the higher time frames. So that's why the focus is typically on the ones on the higher time frames, because that's going to have the most impact in the market. So even when we pull from the harmonic scanner and we bring that back over here to the vibrata and we mark it up, you notice that we really don't take the 15-minute trades. Now, if you take the 15-minute trades, you have to understand where they're called, because what can happen is that those lower time frames can actually take those trades. The harmonic scanner can actually call on the ones that's right up in here. And so when you're saying, oh, it didn't work out, it's because you don't know where you are in the market. You're calling something. Yes, you do have harmonic patterns in here. Yes, this does create patterns, market patterns. It creates the same patterns that's on the monthly. It's just that the ones in the monthly are going to determine the direction as opposed to the ones on the 5-minute and the 1-minute. Every time frame is going to get a market pattern. Is going to get it. And so, but the ones on the higher time frame are the more dynamic ones. That's the ones that tell you where the market's going. That's the ones that help you understand what the market is doing. So now what you see here is we break down to the 15. Okay, we come down here to the 15. In this 15, you notice that I have more momentum. You notice I said, let me not say momentum, let me say activity. This is where you see the activity. So that 4 hour, you notice the 4 hour almost looked like it was coming straight down. We saw a little bit of the correction, but the 4 hour had mainly red candles. Okay, so what that meant is overall in the duration of that 4 hour candle and the duration of that 4 hour time frame, that the overall majority of that was in that downward momentum. So, but when I drop down to a 15-minute chart, I get to see all of the moments. I see everything, right? I'm looking at everything. So you can definitely see everything that's happening. And so if you've ever sat with me, if you've ever had a conversation with me, if you've ever talked, I'm always like, let's look and see what the higher time frame is doing. What's happening? What's going on? What is it doing? And the first thing I tell everybody is learn your support and resistance lines and be able to understand some market structure, understand what the market's doing on the higher time frames. That's always my response. And now you're seeing why. Why is it so important? Why is it important to understand these things? But now as I drop down, the lower the time frames I get, what you're starting to see is like, look at all the activity. Higher time frames tell you where the market's going. Lower time frames are my activity. Higher time frames tell me where the market is going or what it's doing. Lower time frames is actually all of the activity. So now when I drop down to, let me just drop down to the 5-minute. So when I drop down to the 5 minutes, okay, now look at this. Doesn't this look like I'm in here? This is my trend line, right? This is my trend line. But what does this look like? Didn't I just said that in the midst of this, I will have, and I'm gonna change the color on here. In the midst of this, I will have other market patterns inside of my lower time frames. It will create other market patterns, right? You see it, look at this. I have, look, right? 1, 2, oops, I didn't mean it. 1, 2, look, other market patterns. So the same market patterns that are on the higher time frames are the same market patterns that are on the lower time frames. The same market patterns on the higher time frame are the same market patterns on the lower time frame. It's just that these don't move the market. This is the activity. So it's following the same thing. So why is confluence important? When I have confluence across the board, when I have confluence, the higher time frame is equal in the lower time frame, I have a good trade. Yeah, I have a good setup, right? The higher time frame is in momentum with the lower time frame, I have a good setup. So now what you're looking at is when we come look over here at the vibrata, okay, we come over here and we get all these triggers, all these triggers, all these triggers. Now, and most of them are off of what time frame? Who's paying attention? Drop it in the chat. What time frame pulls the most triggers on the vibrato? Drop it in the chat. What time frame pulls them? Absolutely, absolutely, the 5 minute. And so what you're seeing, and remember I just told you that as we look here, what we have, right? Look at all of this. So look at there. That's another support. Doesn't this look like a coloring book now? So we have another support and resistance line right here, right? We have more support and resistance lines that are actually in here. So you can see them kind of, I'm not going to drop all of these on here, but you can see where, you know, look here, you have support and resistance lines that actually happen in the market. I just don't want it to look like a coloring book because I want you guys to stay with me. So now, where do my triggers happen though? So as you can see that even on this 5 minute, you know, I'm going to have that same pattern. I have that same momentum, you know, I have that same movement. Let me say movement. Look, so I still have that impulse correction, continuation correction, you know, and as I look at this, guess where my triggers are? Okay, they're going to happen at all of these areas. This is where the vibrato would trigger it. Okay, of course I can never pull it when I want it. This is where the vibrato is going to trigger an alert. Bam, right there. This is where an alert is triggered, right there. So you notice that it's going to always, this is where an alert is triggered. So all of the activity, this is why they're triggered on a 5 minute. And so you're going to be able to see all of this is, and as we're still selling, you know, it's going to trigger here because that's where we have one. It's going to trigger up here. I'm not going to draw all of them on there, but it's going to trigger in all of those spaces. So if I come back up to my hour, you know, let's come back up to my hour. I just wanted to have a few of them on there. And I come back up to my hour. Now you can hardly see those little lines, those little circles, can you? You can hardly see them. And so now when we get those triggers, all right, now when we get those triggers, you can see why, this is why we check the confluence. So this is what, so after 5 minutes, the confluence is on the 30. So let's go to the 30. Let's check the 30 first. So now look at this. So you can kind of see where we're in this, right? We're headed down here. And so you see how it looked like a whole, it looked like a lot. It really looked like a lot on the 5 minute. But now when we're here, you can see where those triggers are. So now you should understand why it's important for us to check our time frame confluence. So exactly, they are at support and resistance lines. And so, and even still, look at this purple line. Doesn't this reflect what the 4 hour looked like when we marked it up? So from the, when we looked at the 15, where you see the activity of the corrections. So my confluence from the 5 minute is the 30 minute. Doesn't this look like how the 4 hour did, where it's just, you can see that overall momentum. So all of that's red. So doesn't that look like how the higher time frame was when we did the confluence on the higher time frame? This is why that time frame confluence is important. This is going to help you be able to identify those things. This is why that's so important. So far, based on what we've discussed and what we've talked about, do I have any questions, comments, or testimonies on what we've talked about so far? Questions, comments, testimonies on the information that we've talked about so far. Drop it in the chat. Drop it in the chat and I'll get your questions answered. So you guys have a clear understanding, right? It's a clear understanding of where we are. Awesome. Thank you. Thank you. Oh, you are so welcome. You're so welcome. Now, so we have a few more minutes. So, yeah, I got a 5. So I have a few more minutes. And so this is where, so you notice that as somebody already asked, is that's at a support and resistance line. Absolutely it is. So I'm gonna kind of stay in this area right here because you'd want to know where you can get in the trade. So where can I take this trade from? Where can I get in it? because what you don't want to do is get into a trade, right? I don't want to get into a trade like, so let me see here. You notice that some of you guys are probably in this trade right now. So you notice that, let's just look at this live trade. So you notice that blue line crossed over the red and downward momentum, red candle with a flat top, PSR flip to the top, okay? We notice that that is where we are. Now, when I come here, because we're on that next candle, let's just go ahead and look at it. Because I'm on the next candle, if I check my hour, I have confluence. What I don't like is the fact that this really hasn't given me a curve yet. So because it's GBP, I can check my 30. My 30, I'm good. My 30 is clear. I check my 5 minute, you guys should have been in a trade. Now, coming here, it's going to go from here to my next support and resistance line. 10 pips or support and resistance line. So we know we're selling. We know we have that momentum to go down. So what you all do most of the time, okay, is you'll see that we're on a second candle and we'll try to jump in the trade. We'll try to get in the trade after it's already started. We'll try to take the trade after it's already moving. And that's not what you want to do. I don't know. I pray I'm not catching the code. Excuse me, guys. So that's not what you want to do. All right. You want, so if you don't quote unquote miss it, but if you didn't catch this entry, okay, what you do is you wait, and the same way that we do that impulse correct, the same way, because on the lower time frames with that impulse correction, because actually look at where we are right now. No, these are Hikinashi candles. It's not, these are Hikinashi candles. They are not the same. So what the rule is blue line cross over the red candle with a flat top. So when you get a flat top, that's the entry, that's the candle. So it's not about, waiting on the candle to close. So it's not that. So now let me come back here. So this is what I'm looking for. So you notice here, now what's going to happen on this lower time frame, what'll happen is it's going to correct just like we just looked at everything else. So I'll use this area right here because, I can go back to the other one, but I'm gonna just come right here. Now notice that when I'm here on this 5 minute, as we come to these, now look right here. Let's look at this one. So that one actually didn't push up that far. So you notice that we get some sort of correction. Every time we get to a support and resistance line, we get some sort of correction. This one really wasn't a strong correction. Like this one just wasn't. You notice how we attempted to pull through the line. This pullback candle, Hikinashi candles can look like this as well. They can look like this. And when it pulls back, and then, so I'm gonna come back over here. I want you to see a good one. Because if I show you a good one and you'll understand the ones that when they play out the way that one did, you'll still have clarity. So let me see here. Here we go. Here's a good one up in here. So as this is, as it comes to here, okay, notice that I'm not going to get one as picture perfect as I like, but you notice that we have pullback here, okay? So the same market patterns, we had some pullback right here, it pushed up, and then it comes back and it retests that line. So that's what that is. When you see this on that lower time frame, right? You see this on that lower time frame, that's that impulse, that's that correction, that's that continuation. This is why it retests those support and resist. Why somebody else, it'll always be like, it'll pause at the resistance line, then it'll push through and it'll come back and retest. And that's ultimately how you do your entry points. That's ultimately how you know where to enter the market, because you enter the market when it's pushing back up. You enter the market when it's pushing back down. You enter the market like here, you enter the market when it's pushing back down. And so same thing, you enter the market when it's pushing back down. And so this is ultimately like when we're talking about doing your stop orders, okay? I'm not even going to talk about limits tonight. We only have like a few minutes left. So this is ultimately like when you're down here on this 5 minute time frame. So if I'm on my higher time frame, I'm trying not to cough, sorry. My higher time frame, right? My higher time frame is going to give me this direction. But when I pull down to my lower time frame, you start seeing the momentum, you start seeing the activity. So you start seeing the activity. All right. Now, and then of course, right there when it passes that, like you see how it starts wicking out around there. This is why the 5 minute, okay? This is why the 5 minute is triggered so much, because this is how where you set your orders at. You know, this is how you set your orders, you know, where you set your sell stops and things of that nature. So it's, but I wouldn't want to do one against the trend. I'm talking about the ones with the trends. So this is where you set those orders. And when you set those orders is when you set those sell stops and those buy stops, you're going to do so around that activity that's right here. So I know we covered a lot tonight, so I'm going to let that resonate before we carry on into the next part. So for those of you all who didn't catch, it's not last Thursday's. Last Thursday, we touched on it a little bit. But for those of you all who didn't catch last Thursday's, go back to the Thursday before last. Let me see if I can actually see the title to that training. Let me pull it up. Just a moment, just a moment, just a moment. I'm going to see if I can look at it real quick and catch the title of that training, because I want you all to go back and watch it. So the value is, so wait, I'm trying to look at the dates. So it has to be the value of learning the skill set and how to enter a trade, because was that last Thursday? Okay, understanding how to enter a trade and how to use the vibrato alerts. So that's it. That's the one from before. And so watch that one, watch this one, and then we'll continue on with that trend change next week, because I really want you all to understand how to effectively understand why these alerts are called and how to really understand where you are in the market. And when you understand where you are in the market and you understand what's happening in the market, you know, this is definitely going to assist you in your trading, because, you know, like we're waiting on, like when you're sitting there and you're waiting on it to pass that line, that 5 minute is really going to help you understand where to do your stop orders and help you with your entry point. That's why they say drop down, and to that entry point, drop down. And that's what, you know, drop down, and that'll help you understand. The 5 minute is your entry. 15 5 minute is your entry point. Higher time frames tell you what the market's doing. Lower time frames is the activity, and that's where you determine your entry point and where to put your stop orders. And then also, with that being said, you know, that's why so many trigger on a 5 minute. So let me see if I can answer some of these questions. I'll answer some of these questions. We have just a few minutes for that. So let me see. I want to make sure. So I did answer this one. Do I wait till the candle close? Let me say this, because I see a few candles asking, a few questions asking about certain things. Now, when you study and you begin to learn, yes, when you are learning how to trade with Japanese candles, the Japanese candles you do, it's like it's the second or the third candle. It's the candle closes. I need to see if it stops above this one. You know, where's the wick? So many different things you need to understand, and it's very valid. Those are very, very valid questions, and they're good questions. What I like about Hikanashi candles is they translate that information for you. So if you notice that when I switch this, let me just switch this to a Japanese candle really quickly. You know, I do not have to look at this one, but that's that news. But I don't have to come through here and I'm like, okay, let me find my engulfing candle. Let me see, you know, do I have this? Do I have that? You know, do I have a tweezer top? Do I have a doji? Do I have? I don't have to do that. I don't have to do that. When that candle gets a flat top or a flat bottom, it's already done that. So it's calculated that for you. So you don't have to do those calculations. It's translated it for you. That's what I mean when I say the Hikanashi candles translate. So that's what that means. So when you say moving, is that after it appears as a new candle? I missed that question. I don't know what you're referencing right there, because you probably asked that when I was going over something. So do you wait for the candle to push through the support line? I really want you to kind of learn those stop orders. Go back through there, because when you get that, So on the higher time frames, if I'm trading off the higher time frames, absolutely. And I'll explain that. That'll kind of dive into where we go next week. All right. That'll kind of dive into where we'll go next week. But if you stay focused on, go watch last week's and this week, it should bring a lot of clarity. And so would you say 1 or 2 candles? I don't need to wait. That goes back to the Hikinashi candles translating for you. So I'm in an overall sell, correct. So against the trend, if you're in an overall sell, you had a correction, you had trade a correction. Absolutely, that's exactly right. That's trading against the trend. So I'm in an overall sell, and this would be trading against the trend. If I take a buy in this momentum, I'm trading against the trend. I'm trading against the trend. So, and the trend is your friend. The one thing to remember, and that's why you hear me tell you guys on our live calls, I'm always telling you guys, if you take this trade, do not take it for more than 10 pips. Okay. I don't care how far, you don't know how far it's going. If you are counter trend trading, you do not know how far it's going. So it can go 10 pips, it can go 5 pips, it can go 50 pips. You don't know. And so it's better to have perfect practice makes perfect. So it's better to have a trade plan where if you say, look, I don't counter trend trade, that would be your personal trade plan. You can make your trade plan that says, you know what, if I counter trend trade, I only do 10 pips. So even if it goes 50 pips, you're happy and you're comfortable because you know where you are in the market, you're sticking to your rules, because what you want is you want the overall consistency and the overall profit. That's what you want. You don't want to get it today and then the next 6 trades you take, you don't make it because you didn't stick to your rules. You didn't stick to some sort of trade plan. You didn't stick to that because you're trying to push a trade and force a trade. And so that's why I said this is about developing that relationship with the market. All right. Recordings are on YouTube. So let me drop this in here for you really quickly on YouTube. So make sure you're in the Telegram. It's also pinned to the top of the Telegram chat. So there you have it. That's the YouTube channel. And so it's 10 o'clock. It's time to transition the call. So just so if we don't see, thank goodness we don't have to do this. Exactly. No, you don't have to do that with Hikinashi